So I put a video up, was it a video or an image? I can't remember, one of the two, probably both, where you see me putting up very, very large totals all of the time. And people say, sometimes they say, well, how much money did you use to do that? But the problem is that money is an irrelevance, really, because say I have £10 and I go into the market and I trade it 10 times. Have I used £10 or have I used £100? So even if you can put up something that demonstrates a profitable trade, it could have a very small amount of money or a very large amount of money, and it's not really the amount of money that you're using. It's when you enter that trade in the market, it's the risk you're taking at the point at which you enter that trade. So I prepared a couple of slides recently for a course that I did, and it showed two different versions basically of a trade, and they both carry two different levels of risk, and they're both using vastly different sums of money as well. So on one, I was actually scalping. So I was going into the market and I was performing a series of trades. I changed my mind a couple of times, scratched a load of trades, switched runners, switched back again, and I sort of messed around endlessly for ages. But I did manage to get a profit out of it. But the risk that I was taking on that trade was only for the amount of time that I was in the market. So I'd put money into the market, and if I didn't like it, I'd change my mind and pull the money out or scratch the trade. So the risk is defined by that point at which I'm trading, not the amount of money that I'm using, not at all. The next trade was a swing trade, and the swing trade gave me the ability to take a much longer term view on the position. So it's using much, much smaller amounts of money but getting a much bigger trade out of it. And the problem that you have with that is that the point at which you enter the market, therefore, is the biggest risk that you take. You're using a large stake, perhaps, maybe you've broken it down into smaller stakes. Impossible to tell when you see a screenshot. But you're going into the market, and the point at which you enter the market is always going to be the point of highest risk. From there, the market will either go in your favour or it will go against you. Now, if it goes against you, it doesn't mean necessarily that you're going to get a loss. And even if you do get a loss, it doesn't mean by the end of that trade you will have made a loss over the period of that market, the time that market was open. But once you've established that trade, as soon as it begins to move into a profit, your risk begins to decline. And especially if you adopt the right position within the market, then your risk continues to decline all of the time that that trade goes in your favour. So if you look at a screenshot and you see a large total, even if you could see what the matched bets were, it doesn't tell you anything, really. You don't know what was done to achieve that. And therefore, money becomes a bit of an irrelevance as well. If you've got you don't have to have a large bank to get a large return out of the market. The two aren't related. And in fact, generally, the opposite is true. The more money you've got, the harder you will find it to put through the market. So if you give me £10, I can perform absolute miracles with that. I can turn it into many multiples of that £10 very easily. But if you give me £1,000, i.e. 100 times as much, that's much, much harder. If you give me £10,000, I probably won't use most of it. If you give me £100,000, I can't use it. So I may as well give most of that back to you. So just because you have more money in your trading bank doesn't mean that you can earn more. And the market tends to gravitate, first of all, to skill, the ability to deploy money, but also the risk that you're taking when you take that position. And of course, if you do something stupid, you're taking immense risk with very little payoff. And most of my focus is trying to participate in the market in the lowest risk way that I can. So sometimes, probably about 20 to 30% of markets in the summer, I do nothing on. I look at it and I'm scratching my head and I'm just thinking, I just have no idea what's going on. I can't see a way into the market. Or if I can see a way into the market, it's not at a sensible risk, so I just don't do it. It's just not worth it. So I'm looking for situations that I recognise, opportunities that I see that are relatively low risk. At the point at which I do the trade, I don't know what the payoff will be, but I can spot opportunities that are lower risk and therefore start to participate at that level. But one of the things that I want to get across to you as well is that a large bank doesn't necessarily help you achieve that. And in fact, the smaller bank you have, the easier you should find that to be. But yeah, when you look at screenshots, they could have been created in a number of different ways, and it doesn't necessarily need to have large amounts of money to do it. So bear that in mind whenever you're looking at any pictures or blog posts that I put up. There's probably a very simple underlying strategy that was achieved to get there, but I'm more focused on the risk that it took at that particular moment in time. I'm trying to avoid risk at every opportunity, and every now and again that pays off quite spectacularly.
If you're interested in learning more about BetAngel, its tools and the opportunities they present, why not visit betangel.com today to download a free trial.